Good morning, and thank you for joining us for today's demo. Today, we'll be learning a little bit more about taxation in Acumatica. This process will enable you to pull a report out of Acumatica to easily see what amount you need to insert to your tax return for SARS. Let us get started with the process to set up the tax agent in Acumatica. This will be your tax agent that we will use to set up the rest of the tax module. Vendor is tax agency tick box. Needs to be ticked. The settings for the tax agency are configured on the tax agency settings tab, which appears once the checkbox is selected. We will look a little bit more on the checkboxes. Define tax period by end date of financial period. A checkbox that indicates, if selected, that the taxes calculated for a taxable document are reported to the tax period for which the end date of the document's financial period belongs. Update the closed tax period. A checkbox that allows, if selected, the updating of closed tax periods with data from new documents associated with the tax period. Automatically generate tax form checkbox that indicates, if selected, that the process of releasing a tax report should generate a tax bill or debit adjustment for the amount accumulated in the report line for which a net tax checkbox is selected on the report lines. Next, we will set up the applicable tax zones. In our case, this will be the local and foreign, where you need to specify the following: the tax zone ID and the description. This will normally be your geographical area. As you can see, the default tax category is already specified here, but we will look at this a little bit later in this demo. Next, we look at the reporting settings. This is where you will create report lines as per the VAT 201 from SARS. You will need to select your tax agency as we have set up earlier. Under report lines, the report line order is the number representing the order of the report line. Description is a detailed description of the VAT line. Update with an indicator of whether the amount that will be used to update the line is a tax amount or a taxable amount. Update rule. The rule of updating the report line. Two options are available. Option 1, plus output minus input. If the input is more than the output, the amount will be negative. Option 2, plus input minus output. If the output is more than input, the amount will be negative. Tax zone ID. The tax zone indicates the list of taxes. Only the tax or taxable amounts calculated based on the tax included in the selected tax zone will be accumulated in this line. The calculation rule is what you can set up the reporting groups to calculate the tax line. For example, total input tax, total output tax, and the net VAT, payable or claimable. We'll look at this a little bit later. For every report that you generate, the net tax needs to be selected for at least one line item to be able to generate a tax bill or debit adjustment. Here is a reporting group that we have listed for this tax agency. We will see now how to set up the calculation for the specific report group. For instance, we'll look at the standard rated sales. You will need to select the tax agency and the reporting group you want to set up. Then you need to specify the lines that this group will have an effect on. For the example, the taxable sales, the taxable turnover, the VAT on taxable sales, the total output tax, as well as the net VAT payable or claimable. Let's look at another example. The zero rated sales will only have an effect on the zero rated sales local and the taxable turnover. The standard rated purchases will have an effect on standard rated purchases, total input VAT, as well as net VAT payable or claimable. Now we can carry on and set up the tax categories. We will create tax categories that will link to the tax IDs that we will create next. We will need to create a tax category for every tax, as most of the processing screens work from tax categories and not the tax IDs. Let us look at the standard rated sales. We will need to specify the following: the tax ID and description. We'll keep this the same as the category for easy reference when using the category on the processing screens. Tax type. We have an option between sales, use, VAT, withholding. We'll be using VAT. From the checkboxes, we will only be using include in VAT exempt total and include in VAT taxable total, depending on the nature of the tax. In this instance, we will use include in VAT taxable total. The calculation rule. This is a method for calculating the tax amount. We have the following options: inclusive line level. This tax amount is included in the item amount and should be extracted. Exclusive line level. This tax is first level tax calculated on the item amounts. Compound line level. This tax is a second level tax calculated on item amount and amount of the first level taxes. Inclusive document level. This is a first level tax. Also, it is included in the document amount and should be extracted. This tax is calculated on the sum of the line amounts of all items with the same tax applicable. Exclusive document level. This tax is a first level tax calculated on the document amount, not on a per level basis. This tax is calculated on the sum of line amounts of all the items with the same tax applicable. Compound document level. This tax is second level tax calculated on the document amount and the amount of the first level tax. We will use exclusive document level. Cash discount. This is the method that will be used calculating the tax-based amount. If a cash discount is applied, we have the following options: a reduced taxable amount. The taxable amount is decreased by the cash discount. The tax amount is calculated on the document total amount minus the cash discount. Reduce taxable amount on early payment. The system will adjust the taxable amount by using the credit memo. If the final payment has been received within the cash discount period, that is, before the cash discount date specified in the invoice, does not affect taxable amount. Taxes are calculated on the document total, whether the cash discount is applicable or not. We will use reduced taxable amount on early payment. We will select the tax agency that we have set up, then not valid after. This is used when such change tax rate and is no longer applicable. In the tax schedule tab, we can specify the start date of the specific tax, the tax rate, if there is a minimal taxable amount or a maximal taxable amount, and then reporting groups as we have set up earlier, and the group type will indicate where you will use this tax, only for input, only for output, or both. In the categories tab, we can link the tax category we have set up for this tax. In the zones, we can link the tax zone we have created for this tax, for example, the local. In the GL accounts tab, we need to specify the GL accounts that will be used post the transactions to. It is important to note that two different accounts for VAT needs to be used, one for payable and one for claimable. Next, we will create the tax periods. First, we will select the company. This needs to be set up per company. In this tenant, we can select the tax agency, the tax year. For example, we have kept this the same as the financial year. Then we can specify whether we want it half a month, per month, 2 months, per quarter, half a year, per year, or financial period. We will use per month. As you can see, here is the tax periods.